And a very good Thursday morning, just like Suzanne was talking about. I'm John Jenkinson. So glad that you've joined us here on RFD TV and Rural Radio Channel 147 on Sirius XM. She mentioned that it was Thursday, and normally we would have the export sales numbers out this morning, but because Monday was a holiday and the government was closed, we won't see those until tomorrow morning. But let's see what happened last night on the overnight trade. As things got started, we started out pretty weak. As soon as that overnight trade started, there about 7:30, 8 o'clock last night, I was watching this. And this morning, right now, going into the day trade, March corn down 1 1/4, 681 1/2. New crop December down 1/2 at 611 1/4. But I do want to mention that we did firm just a little bit because earlier soybeans were quite a bit lower. Now January beans up 1/2 going into the day trade at 1507. July soybeans up 1/4 at 1525 1/4. And the wheat was not left out of the lower prices last night. Down about 9 to 10 cents across the board for the Chicago wheat market. Kansas City wheat market this morning about the same way, 10 to 13 cents lower. Minneapolis wheat down that anywhere from 10 to 11 cents. And Dow Jones Industrial Average was a little bit firmer and still firming as we get ready to go into the day trade, up 158 points at 33,204. Brian Hoops with Midwest Market Solutions, based in Springfield, Missouri. Good morning, Brian. Good to talk to you this morning. You know, yesterday we got awfully close. If you looked at a corn chart and just taken into consideration that nearby corn chart, we got awfully close to some key levels there, and then we backed off a little bit. But we are firming going into the day trade. Does that give you hope that maybe we'll see this trade find a direction here today?
Good morning, John. It's always good to talk with you again, so welcome back. Yeah, you know, you did see a little bit of weakness overnight, and then the markets started to recover. Now, since the markets have closed, crude oil has kind of started to crash and has dropped. And because we're in such a thin mode as far as holiday trade and news, I am afraid that we could see some spillover because of the weakness in that crude oil market come into play in the grain markets here, especially into corn, that we may pull this market back a little bit. So we had a fairly strong technical close yesterday. We had kind of broken out of this trading range of the bottom side of around 677, and yesterday we were able to close back above that trading range. So is it just kind of a one-day wonder, or will we close back out of it and to the downside once again? You know, the basis levels remain very firm. There's very little farmer selling out there. They just, bin doors are pretty locked, pretty tight right now. Maybe after we get to the first of the year, we'll see some tax-related type selling, because these price levels are very, very attractive. You look at, corn with a positive basis in a lot of areas. You're looking at over $7 corn, soybeans well above $15. Those are really attractive prices right now that you can get for your crop. You know what the supply is, you know how much your yield was, and you're looking at a very large gross dollars per acre for this old crop. It's that new crop that's the uncertainty because of the high expenses. It's going to be an expensive crop to put in the ground, and these prices aren't near as attractive as the old crop. So I do think there'll be some farmers selling, but it may not be till after the first year. But we could be seeing some real choppy type trade here today and tomorrow as we digest export sales and go ahead of a 3-day weekend.
You know, you make a good point. As a farm manager, and in my new position as a farm manager, I had to sell some corn here recently. We've got a $1.45 positive basis in Southwest Kansas, just because ethanol plants and some of those feedlots are still kind of tight on supply. Going forward then, we got to keep an eye on soybeans, according to some people that I've talked to, just for the simple fact that if Brazil does have a home run with their soybean crop, is that going to put the hurt on United States prices?
Yeah, you're exactly right. It certainly will. They planted a monster crop, a record amount of acreage, over 105 million acres, expect a crop size of 151 million tons. Those would be all-time records if they're realized, and they're off to a really good start. There's some dryness in southern Brazil. There's a lot of dryness in Argentina, but the common thought right now is that crop in Brazil is going to be large enough to compensate for any yield losses in Argentina. And if we do see this big crop in Brazil, they have nowhere to store this crop. They're not going to store this product. They're going to sell it into the open market, and that's going to undercut U.S. prices. So these price levels that we're at may not be sustainable if you look out into the future by February and by March. these price levels probably are not going to be there unless this drought really intensifies from Argentina and moves northward into Brazil. Now, and that certainly could happen. That's why you have options markets to make cash sales, manage your risk, and then re-own with limited risk options.
Well, and you talk about those future prices down the road. Somebody that's very interested in that is the livestock trade. We'll get to that. Stay with us. We'll be back with Brian Hoops right after this on the Market Day Report. Continuing on here on the Market Day Report, time to see where we landed yesterday over here in the livestock trade. First stop, live cattle market. December was up 62 by the settlement, 157.45. Had a couple of contracts, February and April, that were lower. And then those far out deferreds were a little bit higher. And I want to stop here and visit with Brian Hoops about this for just a moment. February live cattle and April live cattle have got quite a little spread going on between them. Is that something that you're watching, Brian?
Yeah, there is a spread right now between those contract months, and a lot of the trade is doing spread type trades right now because there isn't a lot of flat price movement, so they're doing more in the spread markets. There's been a lot of spread in wheat. We didn't talk about wheat, but there's a lot of spreading taking place, intermarket spreads there. With the cash this week, I think we're going to look for probably lower prices in the cattle market this week, steady to lower. The show list numbers have increased compared to a week ago, which was a little bit of a bearish surprise. And I look at our slaughter pace each and every day, and this week is a holiday shortened kill week, obviously, but last week was too, and we're way behind last week's pace. And so we're probably going to fall further behind. Next week, we'll start to improve that pace, but we will have one less kill day because of New Year's. And so, again, next week's going to be slow pace, and we just probably have enough animals to meet these holiday short kill weeks, but it's those weeks following when we ramp back up to more of a full kill. Packers have a lot of margins to work with. That's when I think you'll see more gains in this cash market. But for this week anyway, it could be a stalled out cash market, maybe even a little bit lower trade.
All right. Let's review what happened yesterday at the settlement with the feeder cattle. And this is an interesting number out here in the futures. 202.82 for the August live cattle. 202.55 is where we settled. That was up 47. All of those months on the feeder cattle market were higher by the end of the day. And then February hogs down 67. And April was up 12 at 96.57. Brian, this market yesterday just looked like it was hunting for something. It was all over the place.
Yeah, it was. A lot of stops being ran. It probably was hunting for buy and sell stops in those markets. And it seems like when you get a low volume trade, especially in the hogs, that's where they're going to search for. But we did see a pretty big jump in the league hog index, highest levels in about a month. So it's telling us the cash market is starting to rebound in here. We'll closely be looking at export sales in the morning for this hog market. That's really the driver of the futures is what we can see as far as a weekly basis, how much product we're exporting, especially if China shows up once again.
All right, Brian, always a great visit to see you, and Happy New Year to you and everyone there. Brian Hoops, Midwest Market Solutions. And I do want to look at both the dollar and the Dow before we wrap things up and go back to Suzanne. This morning, we've got the dollar down 347 at 103.83. Watch that 104 level. That's a curious and probably a key number there. And the Dow Jones Industrial Average continues to gain a little bit of momentum and a little bit of altitude, up 177 at 33,224. So, Suzanne, we're ready for the open coming up here in just a few minutes.